All right. So once again, Siswami, welcome to our second lecture session in KAFV502 lecture for the 2025 academic year. So this is part A of our discussion in this particular engagement. So previously we dealt with the first question in the 2023 past exam paper, which was dealing with the aspect around the cash budget, right? So now, and then I gave you a homework to attempt, which is of course in relation to the 2022 question paper, particularly the third question thereof. So that's what I would like to endeavor to do a discussion around, so that you have a bit of an understanding of what is happening, and then at least I would have the assurance that your understanding is cement as far as cash budget is concerned. So without further ado, we're going to assess comprehensively. We're going to assess the required section of the question. So in the required part, my sister here, they are requiring, or rather requesting us to prepare a cash flow budget for Wale Watches Pty Limited. That is for the months of April and May 2013. And they say show all workings clearly. And the total mark allocation allotted to this question is 31 marks, which is quite significant. And the second part of the required section, they are asking you to, they're saying should Wale, so they're saying should Wale Watches Pty Limited arrange for an overdraft facility during May 2013? And if so, then provide reasons for your answer. All right. So obviously it will be subjected to what we have determined to be the closing cash balance for the month of May 2013. So without any further ado, we're going to assess what we've been provided in our information. So we are told in the first paragraph that Wale Watches Pty Limited is an entity that manufactures, all right? So it's an entity that manufactures custom-made waterproof insulation jackets and is owned and managed by Moby Dick. Now, Moby has no experience in the financial management and has asked you to assist him in compiling uh, a cash flow budget that is for the month of May and April of 2013. Now, Moby has provided you with the following information. So the first part of the information given to us is the opening bank balance rather, for the month of April, which is favorable. So I want you to note the important detail we are having here. So we're given the opening balance to be used for the first month, which we are accounting for, which is in this case the month of April. So the opening balance was a favorable balance. All right, meaning to say the amount would be a positive value of 8,400 rands. So this information would obviously be used right at the bottom of our cash budget template. So what you have here, it's just a template that I copied basically from the previous question of the 2023 academic year that we're doing. So what I'll do, I'm just going to make some few adjustments here and there so that it aligns to what we are expected to do. So in fact, I'm just going to expand this info. Right. So now we are dealing, of course, in the context of question 3 of 2020. This one is for 2022, rather. So now we're dealing with the months of April, and May of 2013. So meaning to say what you're supposed to have as your parameters here for the months, it's supposed to be the month of April as well as the month of May. Okay, something like this. So
Yes.
don't mind some of these calculations just from the previous question, but yeah, the most important thing I just wanted to bring here is the issue to do with the calculations. All right. So now
Mm.
the information that we have been given currently. All right. I just wanted to show you where to fit in the cash flow budget. So it's gonna come in the cash
Okay.
budget, sorry, not cash flow. So this one is a cash budget. So they're asking us to uh the beginning cash, all right? The beginning cash as per the information we've been given, that's that 8,400. So I'll just simply put it over here, all right? Because it's
Mm.
already been given to us as a giveaway. So I'll just put it over there. Now, so that already technically implies that we've accounted for that information. So we are going to therefore highlight what we are done with, and then I'll just try to use a different color just to make sure that we are done. So now we proceed to the second information. So we're not going to come back to this. We are done with it. Now, customers normally pay 60% cash, 60% cash upon receipt of their jackets, and the remaining 40% in the following month. So the remaining 40% is credit sales. Are we together there?
Mm.
That's what
Yes.
this information implies. So now the total estimated sales per month is indicated in table one. So this table one gives us an estimation of the sales that the company anticipates to make, over the duration of period that we've been given. But remember, they've also given you some estimates from the previous months, like the months of March, April, as well as January of 2013. However, our months of focus, it's obviously April and May of 2013, right? But obviously, this information of the other previous 3 months, it's there for a reason because there's some way, somehow, where it's going to have an influence in the 2 months that we are accounting for. But anyways, without any further ado, we have been given the sales for April in totality to be 120,000, and then for the month of May to be 116, 116,000 rands. Now, uh, that is total sales. So I just want you to notice there. These are total
Yes.
estimated sales. All right. So now, meaning to say that this amount would obviously include both cash and the credit sales. Okay. But for now, we're just gonna try and account for the cash sales. All right. So that's the first thing that we want to deal with. So to do that, because it will make life easier for us to even account as we proceed. So for the cash sales, here's how you're going to show the calculation. It's just going to be a direct calculation. So I'll start with the month of April. So we're going to have 120,000 multiplied by,
60%.
yes, 60%, 100%. So it's multiplied by the 60% over here. I don't know if it's showing. Okay, multiplied by
Yes.
60%. And then for the month of May, it's gonna be 116,000, and that will be multiplied also with the 60%, okay?
Mm.
Like that. So if we do, oh, okay, I don't have my calculator with me today. Anyways, but I'll try to see if I can use my phone to do that calculation.
Okay, I hope as well.
Hmm. So, okay. Oh, you have also on your side, which is perfect. So I'm trying to do with the
Yeah.
now. So for the month of April, it's giving us 72,000.
72,000.
Yeah,
Yes.
72,000. Yes. And then what about the other month?
69,600.
69,600.
600.
Something like that. Okay, no problem.
Yes.
So that's the cash sales. And remember, we have also shown the calculations over here. Okay. So it's very important. So it's either you do it there
Yes.
or you can show it separately over here. But I mean, with the previous question that we did, because yeah, there were units and we had to
Mm-hmm.
calculate the total sales and wada, and then allocate the necessary percentage or rather the appropriate percentage to cash
Yeah.
sale. That's why you notice I had to do it separately like this. Okay. Right. But anyway, so
Mm-hmm.
that sums up our cash sales.
Yes.
So now we want to deal with the credit sales. So we are told that so I'm gonna read it information two again. So customers normally pay 60% cash upon the receipts of their jackets and the remaining 40% in the following month. What does that mean? It therefore means that if somebody buys jackets in January, 60% of this 130,000 is paid in January. But the other
Mm.
portion of the sales figure is paid for in the month of February. Are we together there? Uh, because
Yes.
it's the following month after January. That's why. Okay. So now what we're going to do for this particular question, we're
Yes.
going to have to show it as part of a separate calculation where I would say credit sales like that. Okay. So that would be our first calculation today. So now
Yeah.
with our cash sales, remember our focus is only for the month
Yes.
of April and the month of May. All right. So what I'm gonna do is
Mm.
I'm gonna try and you know check from the month of April what credit sales are we going to have that is going to be included for the month of April? So obviously it can't be the 40% for April because 40% of the credit of the total sales for April is paid for in May. So it follows then that as far as April is
Yes.
concerned, as far as April is concerned, the 40% is for the month of March, which will be therefore paid in April. So I'm going to show that calculation here,
Mhm.
whereby we have, in fact, we could have even done it directly anyways, because I mean, it's not as complicated and complex. Yeah. I
Yeah.
mean,
This one is not
yeah,
complicated.
it's really not. But anyways, since I already shown the format, let me just proceed. So now we're going to take the 110,000, and this time around, we are multiplying
Yes.
this by 40%.
Percent.
And how much does that give you, my sister?
44,000.
It gives you 44,000. And
Yes.
then for the month of May, you'll be taking the one for the month of March. Sorry, for the month of April. All right.
Yes.
If you do the maths, how much do you get?
48,000.
Yeah, it
That's
gives you
120 times 50%.
yeah, 120,000 times 40%. Yeah. So it gives you 48. It gives you 48,000.
Yes.
So now we have our credit sales. There was no any additional information, I'm sure, which affects our sales here.
Yeah.
There was nothing, honestly.
Mm.
Yeah, no, there was nothing. So we're just simply going to plug these amounts. So for this particular month of April, we're going to have 44,000. And then for the other month, it will be 48,000, like that.
Mm.
Now, given that we've done the calculation separately, you can either indicate it directly here on the figures where you put in brackets calculation one, okay? Like that. Just to indicate as a reference, where did you show, or rather, where did you perform the calculation like this? All right.
Yes.
And then that unless otherwise we have something else that might bring income. So I might just want to add another column here just in case, because we have not yet read through the rest of the information to see if there's any other receipts, cash receipts rather, which the company might have received. So yeah. Anyway, so that tells me that as
Mhm.
far as sales is concerned, whether both cash or credit sales is concerned, we have accounted for it accordingly. Now, so technically, we might want to highlight this info because we know we are done with it as for now. But then obviously there is gonna be information maybe where they might refer us back to additional information too, which is what I'm seeing already, car information
Mm.
3, where they're saying the price of raw materials and other variable costs is 60% of the monthly sales and is paid in the following month. And is paid where? In the following month. Korore, this is done on credit basis, right? Let me see.
Mm.
There's nothing else that they've given us that affects credit purchases, and I don't see anything else that might have been an additional income to the company. Unless otherwise, let me see. Mobi needs to purchase a new equipment to the value of 15,000 in April 2013 in order to replace an old piece of equipment which will be sold in April. Yeah, okay, that will be added here, my sister. So, yes, what I'm gonna write. So we're gonna write proceeds from sale of an equipment. Are we together?
Okay.
To be more
Yes.
precise, proceeds from sale of what? Of an of old equipment. All right. If I want to be very precise, so it's proceeds from sale of old equipment, and that amount it will be expected to be received in the month of April. All right. So what I've done, I've just accounted for this particular transaction number 5. But at the same time, you're gonna see that they bought, or rather, they're going to buy another equipment. So they're saying Mobi needs to purchase a new equipment to the value of 15,000 rands over here, as you can see. And then in April 2013, that's when the purchase is happening. Now, in order to replace an old piece of equipment which was sold in April 2013 for 2,000 rands in cash. So already the old piece of equipment has been sold, but then Mobi still has to buy another equipment. Now, Mobi is required to settle the purchase price of the new equipment immediately, meaning to say it's not a scoloto, this one, it's cash purchase, right? So what I'm
Mm.
going to do, I'm going to indicate under, yes, under cash disbursement. So yeah, obviously labor will be there and stuff and other. There's some things you're going to see that I'm going to add, but clearly this
Okay.
one, it will be a purchase of new equipment. Are we together? Purchase of
Okay.
new
So it's
equipment.
under credit sales or
No, it's not under
cash
credit
sales.
sales. The credit sales schedule, it will be done separately. So
Okay.
yeah, I don't have to worry. So this one, it's an independent line item in the cash budget.
Okay.
Yeah. So the purchase of what? Of new equipment, it's happening in the month of April. So we're gonna put it there. At the end of the day, we know that when we totalize the figure here, it's gonna be put in brackets. Are we together? So
Yes.
meaning to say these amounts will be negative. Anything that will be under total cash disbursements, they will be accounted for as negative figures. So yeah. So now I just wanted to make sure this 15,000 we've accounted for it so that I know as far as additional information 5 is concerned, we are done accounting for it. So I'm gonna highlight. And then that concludes additional information 5. However, we still have other line items that we still want to account for. I'll start with then information 3, where they're telling us the price of the raw materials and other variable costs is calculated as 60% of the monthly sales and is paid in the following month. What does that mean? It means if we have raw materials that we acquired in the month of April, all right, it will be paid for in the month of May, which is the month following the purchase. Are we together?
Yes.
Right.
Yes.
So now, meaning to say for April purchases, it will be March purchases that we'll be
Mm.
accounting for. All right. So obviously
Yes.
now we can do this one directly. So clearly I don't see
Yes.
cash purchases. There's no cash purchases here. Because they are being, I mean, the credit page, this credit purchases instead. So what I'm gonna do for the month of March, there we have it. It's 110K, and this entire thing shall be multiplied by 60%. And then we have for the month of May, we will be taking the one for April, which is the 120,000.
April.
Yeah, multiplied by 60%. And how much does that give you for each one of them respectively?
For April is 66,000.
For April, it's 66,000. Yes.
Then for May is 72,000.
For May, it's going to be 72,000. It seems like this question was very simple. The other one we did was a bit complicated for you.
Yeah, this one is much better.
Yeah,
I
this
do
one,
understand
I can even feel it as I'm doing it that it was a bit
it.
light. It was a bit light. All right. Anyways,
Mm, yeah,
let's proceed. Uh, okay. And then now, uh, okay, so this is done. Additional information three, we are done with it. So we highlight like that, so we know we are done. And then now we go to additional information form where we are told the estimated fixed costs per month. Estimated fixed cost per month is indicated in table 2. So what are the fixed costs that this company has? So the first one is salaries. That's the same thing as labor. So, but I'm going to try and use the information we have in our question. So I'll write there salaries.
okay,
So the monthly salary, it's 13K every month. 13K every month. So that will be the same for April and May. As far as salaries is concerned, then I'm just gonna delete this one, production overheads for now. Then we've got rent. All right. No, let me just try to put it
mm,
immediately here after salaries so that it goes in sequence, you know.
yes,
Okay. So now, and then after that, we have rent. After that, then you have telephone. Advertising, advertising, and then water and electricity. All right. So now for rent, there's a catch. So they expect
yes,
a 5% increase from the 1st of May 2018. All right. So now,
mm,
so rent initially was 10,000. But then for the month of May, it can't be 10,000. So that 10,000 will be increased, okay, by 5%. So to show that calculation, it's gonna be like this. So it will be 110 divided by 100, ne? So 10,000 times
okay,
110 divided by 100, which will give you something like 1 comma 1, okay? So if I multiply the 1 comma 1 times the 10K, it will give me the amount which is in, sorry, not times 1 comma 1, it's 1 comma 05, all right? So 10, because it's a,
how do we get that?
oh, okay. So this 1 comma 5 is coming from this, so it's 105, right? Because the 10,000 is now increasing by 5%. So we have the whole 100%, which is the 10,000, plus the 5%. So it means now the rent that
Okay,
it will be including the 5% increment. So if I take 105 divided by 100, it's going to give me 1 comma 05. You see. So now if I take
okay,
10,000 multiplied by 1 comma 05, it will give me the amount which is the increase now of 5%. So which gives you something like 10.5. Are we together?
5,
Yeah.
okay,
Mhm. Then you go for telephone. With the telephone account, it was 5K every month. There's nothing else additional that we were told about it. So we take the figures as they are. And the same thing is true with advertising. Advertising. Same thing is true with regards to water and electricity, 6.4. And then notice we've got our purchase of new equipment, which I've already accounted for. And I think as far as the estimated fixed costs are concerned, that's all that we've been given. There's nothing else additional provided even in the information, or rather in the required section. So what we do is
yes,
for something that is not been requested to do, I can't put depreciation because they never gave us one. So I'm just gonna remove that
okay,
so that we can correctly account for these things. So with the first thing I'm going to do, uh, I'm going to begin. I'm going to begin with the total cash receipts. Okay. So take the
okay,
72K plus the 44K plus sorry, 72,000, right? Plus 44,000 plus 2,000. I'm getting
okay.
118,000
Yes, I've
together.
got that as well.
You got the same, ne?
Yes,
Ah, that's perfect. Yeah, it means you're on track. Then 69,600 plus 48,000, you get something like 117,600.
600. Yes,
So, my sister, that gives us total cash sales. So, what I'll do, I think, let me just expand this now because we have already taken everything we needed from the information in the question paper. So now we go for the credit paid, I mean, for the total cash disbursements. So we're going to add the 66 plus 13 plus the 10, so 66K plus 13,000 plus 10,000 plus 5,000, 1.1, 6.4 plus the 15K. It gives me something like 116,500. So remember, these are cash
500.
disbursements. You got the same?
Yes,
Okay. Perfect. So you're supposed to get that amount of 116,500. Let's add for the other side. So it's 72K plus the 13 plus the 10.5 plus the 5K plus the 1.1 plus the 6.4 to give me 108,000, like that. So that's the total
yes,
cash disbursement.
yes,
Yeah. So now to get the net cash flow, remember you need your total cash receipts minus your total cash disbursements. So if I take
yes,
118, 118,000, right? Minus 116,500, it leaves me with about 1,500 as our net cash flow, 1.5.
yes,
Okay. We
yes,
do this.
1.5.
Uh-huh. And then we want to do the same for the other side. So it's going to be 117,600 minus 108,000 to give me something like 9.6 over here as our net cash flow. Now let's balance the
Yes,
books. So we have the net cash flow. We also have the beginning cash. So you add the two together to give you the ending cash balance. So in this case, that's 1.5 plus 8.4.
8.4.
Yes. So to give us something like 9,900.
9,900.
Exactly. All right. There was no minimum cash balance. There was no short-term borrowing in our case, but the short-term borrowing happened in the month of, I mean, no, not necessarily. They will ask you, why would you need a cash balance? So that's our question two.
Yeah,
Yeah. So, but in this case, your your excess cash balance, I think, how much is it gonna be? So it's just gonna be 9,900, right? Which
yes,
becomes your opening balance. In the following month, 9,900, and it's a favorable amount. So we add the 9.9 plus 9.6, which gives me something like 19,500. Okay.
Standard.
Mhm. Something like that. So my sister, that's your complete cash budget for 2022.
Okay.
Did you get
This
get it
was,
right?
yeah, I did. I got it right.
100%.
I got it right.
Uh,
100%.
no, that's good news. That's good news. I'm happy. I'm happy. I'm happy. All right.
Oh,
So at
I
least,
wish exam could be like this.
yeah, no, in the exam, yeah, if it's like this, that would be Christmas.
Because the 2021 one, it was challenging. I did it, but yeah, I got challenged. But I
What
tried
was the
to
bottom, yeah?
do it. The
Oh,
one for 2021, question
yeah.
4.
Oh,
Yeah, it was challenging.
which one was that one?
Question paper for 2021.
Oh, the 2021. Oh, you tried 2021 as well.
Yeah, I tried 2021 as well.
All right. Not a
Mm,
problem. I think let's discuss it in part B so that by today, when we are,
yeah, yeah,
then I know we are done with cash budget. We are touching something else next week.
yes,
Okay. No
yeah,
problem. So I think, yeah. So as far as this part is concerned, that was all my sister. As far as, of course, 2022 is concerned. So now we are going to look at 2021 questions shortly.
yes.
So when you rejoin again on the on that very same Zoom meeting link, I think just in the
Okay.
next 5 minutes, then we can be